Hello, friends. Good afternoon. Uh, we have Mr. Sunil Subramaniam, our strategic advisor, with us. He'll be giving us, the view on the Trump tariffs that Trump has put 25% tariffs on India. The markets have become, very volatile. Some sectors have started affecting negatively. So he will be giving us, his view. What should investors be doing at this moment? Over to you, sir.
Hi, thank you, Rajnish, and good day, friends. I know this is a challenging time for all of you as investors. So I will try and give a summary of my understanding of the whole situation. So first of all, you can recollect from a previous chat with Rajnish about a month or so ago, where we had talked about the future of India and the impact of tariff there. So I'll just take a minute to explain this whole tariff. You would have seen today that Mr. Trump has actually signed the executive order. And one of the things is that you got to understand that this is a play of the balance of power, right? That is, America for years, because they have been a high per capita GDP country, consumption driven, but don't have the number of people at the low cost to produce things, has depended on the emerging world, where China took a huge share. China has about 13% share of the world exports, and they were very smart to act on it and supply. Now, the key issue here is that the manufacturing cost in the US is at $30 per hour. The manufacturing cost in China today, after years of increase, is $4 per hour. And India is at $1.5 per hour. So you can clearly see that that difference between 30 and 4, which is $26, that profit was being taken away by China. And the US was, so if you see the $26 price, I would say probably $20 was with China, only $6 was the benefit to America. So as a result of which, the US has had to borrow. So they are now at 125% of GDP is the fiscal deficit of the US because they have borrowed. And so what Mr. Trump, and this is not a new thing from Mr. Trump. 1987, he gave an interview to Oprah Winfrey, where he said at that time that Japan was ripping off the US because they were supplying the VCRs and the tape recorders and the Sony cars and I know everything was not the Sony cars, Sony stereos and on the Honda and the Toyota cars. So he has carried this gripe that I'm the buyer, you're the seller. I should be deciding the price and not you as a seller. But the problem was that since no other country had stepped up along with China to really do the manufacturing. See, India was also reasonably there in population, but our policy is because we are a democracy, we are not. China with a dictator kind of a government had pushed through the manufacturing, and in effect, kya hota hai ki the slave becomes the master of the master, if you understand. So the supplier, because the lower, cheaper, poorer country actually wagged the tiger by its tail, which is the American tiger, and was taking away a major part of the profit. So over a period of time, the US, naturally the fiscal deficit balloon, everything. And today, Mr. Trump is trying to satirize what he sees as a historic wrong. And he's saying that I'm the buyer, so I will decide this issue. So that's where this whole thing started. And naturally, along with China, the whole rest of the world, that is Mexico, Canada, the European Union, Japan, Korea, who is supplying had got the benefit advantage, which Mr. Trump is historically setting that wrong. So that's why you see this whole tariff thing coming up. Now, what is India's situation here? Because of our past failure, right? That our surplus with the US is only about $50 billion, whereas China's is about $350 to $400 billion. So what I'm trying to stress here is now this whole China plus one move is where the India's opportunity lies, because our population today has overtaken. The future growth of our population is far higher than China. Our dependency ratio, that is the number of people over by under 60 years of age, right? Because 60 and above people are dependent, is about 10. For the US, it's 26. For China, it's about 15 or something, and it's fast growing. So clearly the future lies with India, but these have to be renegotiated on the new terms because Mr. Trump has got wise to the fact. He says, so for us to think that we can get away without any tariff is a fallacy, because Mr. Trump doesn't want to repeat America to repeat the China mistake with India. But there's a golden opportunity for India that we can substitute China because we have a cost advantage of $4 versus $1.5. We have a supply advantage that over the next 20 years, China is going to lose about 12 crore people from the workforce, and India is adding 15 crore people. So we have a cost. But the problem in India is that we haven't yet skilled up. We haven't got the technology and the skills which China has built up over a period to supply. So today we cannot just replace China, but it's a 10-15-year program where we can. But we have to bear in mind that tariffs are a necessary part, because that's the only way that the savings in cost America can take advantage of it. There's no way we are going to get a deal if we don't have a more equitable sharing of the cost saving. Simple as that. So now look at it from 25% perspective.
Yeah, I mean, because the thing is that others, our competitors like, Vietnam, Indonesia, they're at lower. I think Bangladesh, Sri Lanka is little
Yes,
higher.
correct.
But we are 25% is at on a higher side, which we were not expecting. So that is, I don't know. So now what is the government going to do?
No, but I think
So,
that, Rajnish, to be fair, right, in the short run, right, this 25, 20, these are few things which can easily be saved by productivity improvement, which can be managed with currency depreciation. See, China, how they have really controlled this American thing is through depreciating the yuan. So India will also, if we depreciate the currency to a little bit more than these competing countries, we can compensate that part. If we improve our productivity a little bit, we can compensate. So to think that just because there's, but remember one thing, that this 25% is actually not a bad thing. I mean, you're comparing against the other economies who are on the export side. But if you overall look at it, Japan, Korea, the European Union, they have had to commit to zero tariff on American products in their country in order to get away with that 15% tariff rate. Whereas we haven't given anything. We are still charging US
yeah.
companies tariff. So what I'm trying to say is, but what US wants from us, leaving the tariff aside, is non-negotiable for us, which is they want agri access. They want genetically modified foods to come. They want dairy access, which we cannot do because the nature of our population, the political dynamics, we are a democracy. So I think that no deal for us is better than a deal like what European Union got. Which means if you waive off the tariff on American goods into India, or like Japan committing $500 billion investment in America, those are not things we can do. So I think that,
Right.
but at the same time, I think that Mr. Trump's tweets, the words, you should not get carried away. He's a person who does these things as a negotiating tactic, and
Yeah, that's
he does a deal. Japan के साथ भी ऐसा ही किया था. He had announced 25%, and the deal signed, it went to 15%. So I believe that our team is continuing to talk. August 3rd week, US team is coming here. Some kind of an interim deal will be announced. So, and we will negotiate that deal in the areas we want, which is Bangladesh, Vietnam. In that competition, we will definitely try to extract. So we have to give something to America. What is that? We probably have to buy more oil from them than from Russia. We probably have to
yeah.
commit to buying
And
more. So I'm just saying, be patient that this is the way of negotiating tactic of Mr. Trump. That when the next trade talks happen in third week, I'm sure that by September 1st, which is a period of a month, we would have some kind of interim deal. At least the easy things would be out of the way. So don't look
so
at.
what do you think our investors should be doing now? I mean, mutual
I think
funds,
that two
do
things
you
are
think
there.
top ups should be there
So
or
our
just
three things I
hold?
will say, right? First is assess your risk appetite. If you've got a higher risk appetite, this is a golden opportunity to buy into tariff affected sectors because there's an overreaction in the market. But bear in mind that things can get worse from today over the next few days. As the noise, as tweet after tweet comes, things could get worse. But if you have the jigger to handle that, then you should actually go and buy these where the heavy correction is taking place. But please make sure that your risk appetite, that you're not a person who will lose sleepless nights because of that. Right? That's number one. Number two is if you are not like that, if you're a moderate guy who say, I don't want to avoid, then you stick to domestic oriented sectors today because only 20% of our GDP is related to external orientation, right? We have 2% share of the world's exports, right? So there are enough domestic oriented sectors where also correction is happening because when an emerging market FII sells it, he sells across the board. He doesn't
Yeah,
sell only those sectors. So a passive fund, if there is a passive emerging market ETF is seeing withdrawal of money, they have to sell every sector that they're holding.
everything.
So today there are correction happening even in domestic oriented sectors. So that's a safer area to play. We are getting some correction. You're getting it cheap. So from an SIP investor who is in there for the long term, I would say this is the time for the next 2-3 months. Please double your SIP installment, right?
No,
Because rupee cost averaging works only when there is volatility. If the
true.
market is going every day up, then this whole rupee
Then it's
cost is a fallacy because every day you're
right,
buying more expensive, more expensive, more expensive. It's
right,
because
right.
there is a thing called volatility in the market that an SIP investor benefits from rupee cost averaging. So it's as simple as that, right? So to me, that's a clear. If you have the risk appetite, buy the riskier assets today. If you don't have the risk appetite, use the SIP route. increase the installment. And if you want to make your own allocations, make it into domestic oriented sectors, like banking, like discretionary consumption, like capital goods. All of these are not dependent on Mr. Trump's tariffs. So I
Right.
say that, stay confident. And remember, the biggest advantage here is domestic fund managers are flush with money thanks to the support of the SIP book. Every month they are getting 26,000 rupees fresh cash to buy, right?
True.
So you empower them, they will make sure your journey is smooth and the wealth creation happens. So trust the mutual fund manager to make the right tactical calls. You don't need to make them yourself. So diversified funds, I would say multi-cap and multi-asset are the two should be the core form. Why I say this is fund managers make choices, but if you limit their choices in terms of the cap curve, then you are expanding their ability to choose the right stocks and sectors. So a multi-cap fund, because it forces him to buy 25% small cap, 25% mid cap, and 25% large cap,
Right.
he doesn't have to worry about that part, and he focuses all his energy on sector and stock within that cap curve.
Right.
So this is why multi-asset I'm stressing on is because multi-asset funds by and large tend to have a large cap allocation. So your mid and small cap can come from the multi-cap funds, but your large cap asset plus gold and silver are a key.
Gold, silver.
And we all seen that ultimately, because the world is going through these challenging times, the central bankers are buying more gold and a little bit of silver, right? So I would say having a decent amount of gold and silver in the portfolio will not hurt you. It's good. So multi-cap and multi-asset, put these together, you will have a good balanced cap curve and a balanced across the commodity cycle, a good portfolio. So I'd say these are the funds of my choice in this kind of a environment, right? And stay confident. Like I say, Bharat pe bharosa rakho.
Yes, sir. Even if you see, Bharat pe bharosa to hai because markets have not corrected at all. I mean, we were expecting a panic yesterday, but because of expiry, it was volatile. And today also, it went down and again markets are, flat. So I think Indian market have become matured. I think Indians investors have become matured.
Yes, that's very, very
Sure.
true. That's sure. See, right
Yeah.
from September, the market correction, SIP book has only gone up by 3-4 thousand crores.
Hmm.
So clearly the maturity of the people, but also maturity of the distribution community who have made the investors to stick to their, goal planning and
Yes,
asset
yes.
allocation.
We have not seen any redemptions. In fact, the money is
Yes,
coming in only.
yes, that's what I meant.
Sure. Thank you. Thank you very much, sir.
Thank you, Rajnish, and all
Always,
the best.
always a pleasure talking to you.
Thank you.
Thank you, sir.